Hey everybody, Smart Silver Stacker here. Hope you're doing well. There are powerful forces at work in world gold markets right now, and things are really starting to get shaken up. We've got Donald Trump and Elon Musk advocating for an audit of U.S. gold reserves at Fort Knox, the first audit in decades. Central banks continue to load up on the metal, and the U.S. is importing quite a bit of it as well. The reason why? Well, there's some speculation about that, and it could have some major implications for the gold price. We also just got some revealing data about gold ETFs that stackers should be aware of, and I want to revisit the gold chart today as well because the technicals suggest that things are getting interesting. So let's get to it. The gold price remains strong. It closed Friday over $2,900 and it remains near its record high that was set back in February. Let's think about this. Trump and Musk are publicly questioning whether the U.S. still has its gold. And while conspiracy theories abound about the gold in Fort Knox, there is actually some market odds regarding this. Polymarket, a betting site, is currently giving a 14% chance that the gold is missing. People are actually betting on this right now, and 14% might not sound like a lot, but given the magnitude of the event, if the gold is in fact missing, 14% is a pretty significant chance. Now, why does this matter? Well, the US government hasn't fully audited Fort Knox since back in 1953. And this raises a big question. Why now? Why are they questioning these reserves at this point? What do they know? And more importantly, what do they have planned? Maybe they just want to make sure the gold is there, sure, but there is a lot of speculation right now that this could even be related to a global monetary reset, potential institution of a gold-backed currency, and of course, all of that is just speculation. Nobody knows for sure. But when you have $36 trillion in debt and a completely unsustainable global financial system based on these enormous and growing levels of debt, a reset might be the only way out. And auditing U.S. gold reserves would certainly be something you would need to do before any such move. Now, while the U.S. is planning some new transparency with its gold reserves, at least it sounds like that, we'll see, I guess, how that plays out. Central banks around the world are continuing to expand their gold reserves at a brisk pace in 2025. According to the most recent data from the World Gold Council, global central banks added a net 18 tons of gold to their reserves in January alone. The top buyers, Uzbekistan, China, and Kazakhstan. So it sounds like the de-dollarization trend is alive and well. These are nations who are shifting their reserves away from US dollars and into hard assets. According to the most recent data from the U.S. Treasury, China in 2024 dumped about $57 billion worth of U.S. Treasuries, and they've been loading up on gold the whole time. But this time around, it is not just foreign central banks that are loading up on gold. The January trade deficit in the U.S. just hit a record high, and a big contributor to this was that gold imports into the U.S. from Switzerland absolutely surged. Now, a majority of analysts seem to agree that this loading up of gold inside of the U.S. is largely due to buying ahead of the implementation of tariffs. However, there is some speculation out there that this huge influx of gold into the U.S. could actually be something like refilling the U.S. gold reserves at Fort Knox. And again, while this is speculative at best, it is interesting timing considering the fact that we just got this call for auditing U.S. gold reserves. So spot gold price closed above $29.50 an ounce. That was an all-time high in dollar terms just 2 weeks ago on February 24th. The gold price remains at or near all-time highs in euros, Japanese yen, Chinese yuan, Australian dollars, and Canadian dollars, with U.S. dollar prices still near their peak. However, the GDXJ index, which aggregates junior gold mining stocks, sits just under $52, compared with $167 back in 2011, when the gold price peaked at $1,925 per ounce. Today, the spot price is 50% higher, while the GDXJ is down more than 68% from its peak. Today's sponsor, Gold Mining Inc., New York Stock Exchange ticker GLDG, is trading within a few cents of its 5-year lows set during the March 2020 global panic. As of March 7th, Gold Mining Inc.'s market cap is $160 million with no debt and $130 million in cash and equity holdings. Gold Mining Inc. owns 80% of U.S. Gold Mining Inc., ticker USGO, and just over 12% of Gold Royalty Corp., ticker GROY. 9.9 million shares of USGO are quoted at just over $90 million. 21.5 million shares of GROY are quoted at over $29 million. The cash position is $11 million, so the total is right around $130 million. Yet, when the company originally acquired their dozen gold projects, the peak combined market caps of the companies that held them was approximately 850 million Canadian dollars, which during the period 2010 to 2012 was much closer to par with the US dollar than today. The combined peak market cap was calculated based on each respective company's peak share price during the period prior to acquisition. So the peak market cap of companies acquired 850 million Canadian dollars in 2010 to 2012. The current market cap of Gold Mining Inc. is $160 million in 2025. The gold spot price in 2011 was $1,925, and in 2025 it's $2,900 plus. Remember that Gold Mining Inc. owns 80% of U.S. Gold Mining and 12.7% of Gold Royalty Corp. Right now, Gold Mining Inc. is trading for 82 cents per share, which is near its 5-year lows. In August of 2020, Gold Mining Inc. hit $2.72 per share when gold first reached the $2,000 an ounce mark. Yet the stock is now 68% lower. The value proposition is intriguing at today's stock price of about 82 cents per share. As set out above, once I account for Gold Mining Inc.'s cash and publicly traded stock portfolio, the company's dozen gold properties aggregating 12.5 million ounces of gold equivalent, estimated mineral resources in the measured and indicated category, and an additional 9.7 million ounces of gold equivalent estimated mineral resources in the inferred category are valued for only $30 million. See the company's website for details of individual resource estimates and particulars of underlying technical reports. Gold Mining Inc. owns a dozen projects containing an aggregate of 12.5 million ounces of gold equivalent estimated mineral resources in the measured and indicated category, and an additional 9.7 million ounces of gold equivalent estimated mineral resources in the inferred category. There is a gap between its market price and asset portfolio, and this is how I look at this situation. Gold is trading at an all-time high, while Gold Mining Inc. is near its COVID-19 lows. On top of that, a shareholder of Gold Mining Inc. is gaining additional exposure to a portfolio of gold projects containing an estimated mineral resource of 12.5 million gold equivalent ounces measured and indicated, and an additional 9.7 million inferred, valued at only $30 million. With Gold Mining Inc. down 68% from its 5-year high, this is an attractive opportunity worth performing due diligence on. This is a management team consisting of industry veterans with decades of experience in the industry that speaks for itself. Amir Adnani is the founder and co-chairman of Gold Mining Inc., along with the president, CEO, and a founder of Uranium Energy Corp. He advanced that company from concept to U.S. production in its first 5 years, and it is now one of the largest uranium companies in the public markets. David Garofalo is the co-chairman and director. Before joining GLDG and GROY, David served as president and CEO of Gold Corp Inc. until its sale to Newmont Corporation in April 2019. He was named Mining Person of the Year by the Northern Miner in 2012 and Canada's CFO of the Year by Financial Executives International Canada in 2009. Now is a great time to do your own research on Gold Mining Inc. You can find out more at goldmining.com. There's a link down in the description. Now, on top of everything else that's playing out in the gold market, the U.S. is currently slapping tariffs on top gold-producing nations. The U.S. just increased tariffs on China, that's the world's #1 gold producer, from 10% to 20%. We've imposed a 25% tariff on Canada, that is the world's #4 gold producer, and most recently, Donald Trump has threatened potential major tariffs on Russia. That is the world's #2 gold producer. And just to put that into perspective, if we have $2,900 gold and you impose a 25% tariff, for example, in the case of Canada, that means that an ounce of Canadian gold imported into the US now is going to cost you $3,625. And we've already seen the impact that tariffs can have on metal prices. For example, just this past Tuesday, Donald Trump was giving a speech to Congress in which he announced a 25% tariff on copper imports. And the following day, on Wednesday, we saw a nearly 5% surge in U.S. copper prices. That is the biggest single-day move in the U.S. copper price in over 2 years. This illustrates the major impact that these tariffs can have on these markets. Now let's take a look briefly at the gold price chart, because we got to remember that gold broke out of a major multi-year cup and handle pattern just last year, and that did kick off this major bull run that we've been on. However, when you look at the depth and length of this cup and handle pattern, it suggests that we should see $3,000 plus gold before this bull run is over, and I suspect that it may go much higher than that. And the most recent ETF data from the World Gold Council seems to confirm that big moves are ahead in gold. Just last month, in February, North America saw the biggest inflows in gold ETFs since 2020, and it was the strongest February on record. So this seems to suggest that the smart money is getting into gold now. All of these factors taken together seem to suggest that something big is happening in gold right now. It's just not entirely clear what it is yet. But all the signs do seem to point to higher prices. It's not financial advice, just my take on things. But it is my analysis that we will see $3,000 plus gold prices this year, and we probably won't have to wait too long. But leave me a comment down below to let me know what you think. If you enjoyed this video, make sure you check out the video that's popping up on your screen now. Thanks for watching, everybody. Stay safe and happy stacking. Smart Silver Stacker, out.